Welcome back to the channel, everybody. So glad you're here. Today we're going to cover the 3 most commonly discussed kinds of markets and how you can win in any of these markets regardless of your intentions. Buyer's market, balanced market, and seller's market. And let's get right into the video. Now, how do we determine what kind of markets that we are in and who has the advantage of these markets? Typically, we look at what's called months of inventory. This is my absolute favorite stat. And what that means is if no other houses were listed in any given market, how long would it take for all homes to be bought based on the number of sales in an area? All right, so first off, let's talk about the buyer's market. In a buyer's market, we typically have 6 to 9 months of inventory. Anything more than that would be considered an extreme buyer's market. How do you win in a buyer's market? Well, as a buyer, it's quite simple. Typically, you have a lot of choice. You can lock up a home with a lot of conditions. Typically, prices seem to be a little bit lower and you have a lot more leverage. Typically, what you're able to do is get a lot more bang for your buck in a buyer's market. Maybe you can get into a neighborhood that you've always wanted to get into. Maybe it's a great time to consider an upgrade in that market. Maybe it is a great time to get a larger home than you would normally be able to afford in that market. Now, the types of things that can cause a buyer's market can be maybe less beneficial down the road. Super high interest rates can cause a buyer's market. A huge abundance of supply can cause a buyer's market. Typically, that's not a sign that things are going well economically. So even in a buyer's market, it's important to be mindful of what you're purchasing, making sure you're not taking on too much leverage. That's how you get in trouble. Typically in Canada, the 5-year fixed rate mortgage is what drives the housing market. So we renew our rate every 5 years. We get a new payment every 5 years. And if you're in an environment where you believe that interest rates are going to be increasing, you do want to be mindful of that when your mortgage comes up for renewal, so you don't have what's called payment shock on renewal. Unfortunately, we don't have what they have in the US, which is the 30-year term. So, you have the same payment for 30 years, which would be fantastic. Would it lead to lower house prices overall? Seems likely given the evidence that we have from the US, but it's not a sure thing because we do still have the supply shortage. So as a seller, how can you win in a buyer's market? So if you're going after a home and you're like, you know what, I'm going to go for an upgrade. You can lock that home up conditional on the sale of your home, most likely, considering if it's been sitting for market for a long time, say, hey, you know what, give me 3 months to sell my house, 6 months to sell my house, whatever. At least you have an offer that you're happy with. I like to say it's typically the most expensive condition in real estate. If you're in a buyer's market where there's a huge glut of inventory, and we'll say, let's say 9 months or more, an extreme buyer's market based on Canadian standards, probably be a lot smarter to sell and see what you can get for your home first and then capitalize on that buyer's market. If it seems like you're moving back towards a more balanced market, though, it may be wiser to lock up where you're going first, especially if things like family, school district, and location close to work is important to you. So hopefully that demystifies what's going on in a buyer's market. Moving on to the balanced market. So this is when inventory is a little bit lower, 3 to 6 months of inventory on the market. So this is where the fun kind of happens and was where your real estate professional can really guide you. Are you on the outer end of a balanced market where you're more closer to a buyer's market, or are you on the lower end of a balanced market where you're closer to a seller's market? Typically, we see balanced markets within any markets, and that can be dependent on neighborhood, quality of the house, trends over time, the feel of a neighborhood, what kind of amenities are being built. Is the neighborhood in ascension? Is the neighborhood in decline? What is happening? Is it the best street in a not great neighborhood? Is it the worst street in a great neighborhood? All these things can play into what is happening in a balanced market. This is where buyers and sellers have an equal amount of negotiating power, and it's in their best interest to work together. And we say this all the time, real estate should be a win-win. It shouldn't be an adversarial relationship. It should be a cooperative relationship between buyers and sellers, trying to make sure that everybody does the best in their real estate transaction. In a balanced market, if a buyer feels like they paid just a little bit too much and a seller feels like they sold for a little bit too less, that's probably the sign that it was a good deal. So how to win in a balanced market? So buyers want to go after what you can afford. You're not in a buyer's market, so lowballing in neighborhoods that are out of reach financially is probably not a great idea. That could cause you to miss out on a balanced market that is moving towards a seller's market. If you're looking outside of affordability, hoping that you can get into a neighborhood, misunderstanding that, hey, we aren't exactly in a buyer's market just yet. Target houses that you can afford and try to get the best deal that you can in those neighborhoods. Maybe you want to get a house on the best street that requires just a little bit more work that you're comfortable with, that's been sitting for a little while. Maybe it's time to get an entry-level house in a neighborhood that you may not normally have been able to afford. Or maybe it's time just to get into the market at all and say, hey, you know what? It seems like the value for dollar is there. I'm going to go for this. It seems like that first home that I purchased, I can sell it now for a profit, whatever that may be, and I can make that move. It's a good time to start looking and start planning your next steps if you feel like you are in a balanced market. Now for sellers, the same can be true as always. Price supersedes all other marketing activities. It's extremely important to make sure that you are priced exactly right in a balanced market. You want to stand out like a beacon in the night and say, hey, this is excellent value. We're not going to give our house away. We want to make sure that we're maximizing what we're selling here, but we're going to be reasonable. We're going to be willing to accept perhaps a conditional on the sale of the home, perhaps a longer than usual financing condition, a home inspection condition, all of these things that we typically see in homes around the area. Especially if you're concerned that your neighborhood may be on the decline, it may be wise to price your house to get action showing equals offers. If you are making a move within the same market, remember, you're going to find that on the buy side too. You can take all that advice from the buyer's side and then win more on the buy side than the sell side. The balanced market is where the skill of your agent really needs to shine through, help you identify the most profitable opportunities and take it from there. All right, and the third type of market that we have is the seller's market. So a seller's market is when we have 0 to 3 months of inventory. So obviously there's variance. Once you get below 30 days of inventory in a market, I would consider that an extreme seller's market. Now, in major urban centers in Canada, we've all been conditioned that we are basically just in a permanent seller's market. We've been on essentially a 40-year bull run of real estate in the Canadian housing market. So, we are conditioned to believe housing prices go up. That is not always true. Typically in Canada, real estate prices double every 10 years. We saw, that process get very extreme in 2021 and 2022. And a seller's market is typically when we have 0 to 3 months of inventory. A lack of supply. We've all heard the term the Canadian housing crisis. There is not enough supply. We have a population growth of close to 3.5% to 4%, but housing starts of 1 to 1.5%. That's just a math problem that doesn't really work. So we do have this chronic housing supply shortage that can cause a seller's market. But as we've seen, as interest rates rise, that can cause that seller's market to move very quickly into a balanced market and then very quickly into a buyer's market where we're not used to having that amount of inventory. Now, interestingly enough, when we have, 1 month or less, as soon as we cross that, it starts to feel like more of a buyer's market because houses stop selling for like a record price in a week. That doesn't mean we're not in a seller's market. It just means that we're not setting records every 5 minutes in the real estate market. It doesn't mean the market is crashing. We could still be in a seller's market based on inventory. Some pitfalls in a seller's market that sellers and buyers can fall through. When sellers see a record price for a home, the groundhog effect is saying, oh, you know what? My neighbor just sold that house for X amount of dollars. My house is way nicer. I'm going to price that house for $200,000 more than that person sold it for. So kind of aspirationally getting their home out of reach. That can create, a situation where even though you're in a seller's market, your home sits on the market. Not great. Things that buyers can do. Once again, going back to those areas of affordability where we see, okay, you know what, if you're seeing a house for $499,000 in a $750,000 neighborhood, clearly that price point is designed to generate multiple offers. Better to focus on homes that may be priced for value, may have been sitting for a little while, maybe the market has missed, and once again, the skill of your agent can help you find that. Now, for sellers in a seller's market, if you are hoping to buy, remember, you are going to face really fierce competition on the buy side as well. If you have less than a couple weeks of inventory in your market, it may be wise to lock up your home where you plan to move with your family, especially if there's other people involved, and you need to know where you're going to be landing because there's a lot of pressure. If you take a great offer on your house, you have 45 days to closing. That's not that much time to find a home for you and your family, especially if you want to stay within the same neighborhood. Maybe it doesn't matter. Maybe somebody pays you for that inconvenience and you're totally happy, living in a furnished rental for a little while or a hotel. But that gets tired really quickly. So in a seller's market, it may be wise to find find your home first, as long as you're 100% confident. Do not overvalue your home in that area as well. You know, that can be dangerous too. If you think dreaming with stars that your home is going to all of a sudden break all records, and it may not be the case, really depends on your personality. Get a qualified professional to come and give you a great market evaluation. Make sure that you have really great data for what it is you're trying to accomplish and get clear on your goals. Thanks again for watching the video, everybody. Hopefully this demystified the 3 types of markets. Hopefully you are in love with months of inventory as much as I am. Be sure to like and subscribe and share this video. As always, we will see you on the next one.